Good morning, everyone, and welcome to Atradius's first webinar of 2024. For those of you who've attended before, you'll know who I am. My name is Lucy Stagg. I'm the operations manager for the commercial department here in the UK, and I'm joined today by a few of my colleagues, and we're going to try and debunk the myth of what actually is credit insurance today. I'm joined by Ruby Hartery, who is one of our senior underwriters in our risk services department, who's currently looking after retail. We also have Yvette Gray, who's our country manager for collections here in the UK and Ireland, and Nicola Hinchliff. She's one of our senior account managers who looks after the North and our Midlands region. I think it's probably safe to say we all know that credit insurance protects businesses from the risks of non-payment of invoices, or bad debt protection, sometimes it's called. This literally means if your customer can't pay you or won't pay you, refuses to pay you, your insurance policy will pay out. Your invoices are actually covered. Now, there's a whole host of things related to credit insurance that we could dive into, but I kind of want to try and keep it as specific as I can today to give you guys in the audience the best chance of really understanding what credit insurance is for. So Ruby, I want to throw over to you and ask you to kind of explain when our customers are dealing with their own customers, how do we help them make businesses decisions, and what does our policy do that helps them to kind of interact with their own customers?
So my job as an underwriter ultimately is to make a risk assessment of our customers' customers. So what we would term buyers, ultimately make a recommendation about whether or not we think they should be trading on credit. And we do so by underwriting a credit limit. So I guess the first thing to talk about, I suppose, is the information that we use in order to make that risk assessment of a buyer. So our primary source of information will always be financial statements. So our first port of call would be looking at the latest publicly available information from a company. So in the UK, everyone has to file stat accounts. So that would be our first port of call. But I suppose the downfall with this is that these can often be 12 months, 18 months, sometimes 24 months out of date. So what we've done over the years is build up a huge network of contacts with businesses in the UK. And this spans kind of every trade sector, every industry. So when a customer of ours applies for a credit limit, they will be receiving a decision based on often very up-to-date information, or at least we'll have a contact so that we can obtain that kind of information. I think as well that what that contact provides us with, not only that updated financial insight, but it also gives us access to that kind of softer information that helps us build a kind of whole picture of a risk. So access to what a business's strategy is, their own market insights and sector insights. And that kind of helps us build, like I said, a kind of whole picture of a risk. And in some cases, it might also help us support cover where maybe the financials on a standalone basis wouldn't support that. I think as well, probably important to mention, where we're not able to support cover, I suppose that access to information and those insights that I mentioned, it assures our customers that we've kind of exhausted every avenue in order to be able to support cover where possible, and that a decision that we make to potentially reduce or remove cover will be made based on bang up to date information.
A credit limit, then, that's our way of delivering that information. Is that fair to say?
It's essentially us saying, yes, we would support you trading on credit up to this amount with this customer. Yeah.
Nick, can I maybe ask you to just jump in there and just kind of explain how that process works for a customer and how credit limits interact with the policy?
Yeah, so when a customer has a policy with us, they have access to our online database and our online system, which is called Atrium. Via that system, they're able to process the applications, which would then go direct to the underwriters, so Ruby and her colleagues. So it is very seamless and it's a very easy process. They can also then access our customer service team, who are also on hand for any queries, any chasers for customers who have very urgent requests, and also us as account teams as well. We're also there as an additional layer to help with that process.
I think it's also important to highlight, I suppose, the additional value that the insight that we have gives to the policy. So you mentioned, Luce, obviously the basics of the policy is that it protects against bad debt. But I think what our insights that we have in risk services also adds in terms of that value is almost a really good steer that we can give our customers in terms of where they should potentially be looking to grow or maybe not grow their business. I think ultimately there's always going to be unforeseen failures across all industries. Unfortunately, I don't have a crystal ball. I wish I did. But ultimately, the policy is always going to protect against those unforeseen kind of failures and losses. But the insights that we have in risk services allow us to foresee where there are issues. And because we have this access to this updated financial information, we can kind of steer our customers in the direction where we feel like a business is not doing so well. Maybe they can look to then diversify their revenues. So it's kind of is a lot more to the policy than just the simple protection of the bad debt. It also gives our customers a really good idea of maybe where they should be looking to diversify revenues and how it gives them a good opportunity to kind of try and almost replace revenue before a customer fails.
It's fascinating, really, because almost what the policy is trying to do and what we are trying to do as an organisation is give businesses as much information as possible so they can make their own sound business decisions. You know, it isn't just oh my goodness, I haven't been paid, quick, give me the cash to replace it. That's almost like the last part of what the policy does for our customers.
Yeah, we are at the end of the process, and typically something has gone wrong in the process for it to get to us. We kind of consider ourselves as the goalkeepers of the credit insurance world because something's gone wrong. And then we normally jump into action to stop prevent the loss for our customer. But I mean, we were essentially set up to make the lives easier for our insured customers. You'll know that at a certain point in time, if there is an overdue balance, the customers are obliged to notify us of that potential loss so that our underwriters like Ruby can review the risk and make decisions accordingly. But collections was also set up to make the lives of the customers easier so that at that point, rather than just notifying us, they could then capitalise on the Atradius brand and our own resources to jump into action, to start the collection process and contact their customers or debtors as they are at that point to make sure that we're able to get payment, on a very timely basis. So we're set up very much like credit insurance. We're based on a centres of expertise basis. So that means we service close to the customer, but we collect close to the debtor. And you might ask yourself, well, why is that important? Well, particularly when you're trading internationally, this is hugely important because we're in 40 countries now, so we're almost everywhere that credit insurance is. And when you're collecting from a debtor overseas, you've got language capabilities, you've got various different legal jurisdictions, and actually you're not quite sure what documentation you need to go legal. So that's why having a collector, an Atradius collector who's, local to your buyer, local to your debtor, who's able to engage in the same language and get you to the top of the queue. So in 2023, our collectors in the UK and Ireland collected more than 34.5 million from debtors in the UK last year. So that gives you a little bit of scalability for us. And globally, we collected more than 252 million value of debts from debtors globally. So that just gives you a little bit of size and scale of who we are and how we operate.
That's a very impressive number of it. As you were chatting then, all I was thinking is, even though I've been learning Spanish on Duolingo, that's going to get me nowhere trying to collect debts in Spain, I will be honest.
No. You can imagine somebody in Spain getting a letter from a lawyer in the UK is just going to go in the bin. It's not going to do anything at all. You need to be on the ground.
I guess the two, the insurance policy and our collection service are interlinked, but would a customer have to have insurance to then work with you as a collections agent, or?
Well, it's interesting you should say, no, you don't. We do offer collections to non-insured customers. And from a value perspective, our non-insured business is almost the same size as our insured business. But we do very regularly have to educate our non-insured customers to be as disciplined as our insured customers, because let's be honest, no credit manager wants to use a debt collection agency. We're seen as a necessary evil, okay? Even our insured customers, they would prefer to collect it themselves. I understand that. But inevitably, and we know from our own research, because we can conduct a survey every year called our Payment Practice Barometer. And I think that's available for our customers to find on the website. And that's a survey of credit managers in different countries on how they use credit, on what terms they're getting paid, on extended payment terms. And we know from that research that companies, at the moment especially, companies are using extended credit to fund to bridge funding gaps and to manage and improve their own cash flow. So you really do need a trusted partner to get you to the top of the queue, because they will pay. People will, when they're managing their own cash flow, they'll pay people on importance. And if you've got the Atradius brand behind you with our collectors regularly calling those debtors, that'll get you to the top of the list.
You mentioned something there, Yvette, about being seen as a necessary evil. I think we've all got a bit of a scary opinion on debt collectors, and we've all watched TV shows with people knocking on the door and all the rest of it. What kind of approach do you guys take?
So we've got our amicable phase, which is typically the first 30 to 60 days, where we allow ourselves the ability to get in contact with the debtor. So that could happen straight away, because some debtors will be very responsive. We have to try and identify the can't pays from the won't pays. Some people will be very responsive, and we allow ourselves that amicable period to get in touch with our debtor, find out if they have the means to pay, when they will pay, and actually obtain payment from them. That could be an immediate payment, or that could be maybe a payment plan if they are experiencing financial difficulty. So that amicable period is typically when our collectors will send out some email correspondence. We have our own debtor video, which goes to the debtors, and obviously telephone calls as well. Once we get to the end of that 30 days, or somewhere in that amicable process, we'll make an assessment. Now, that assessment could be on day 2, if it's clear the payment is not coming, or it could be on day 31. And we'll make an assessment to say, look, this is either going to be paid, it has already been paid, or it's unlikely to be paid amicably. We have then the option to escalate to legal action. And then we have our own lawyers that we use, and we can do that all on behalf of the customer, so they don't need to chop and change legal providers. We can take it right the way through the legal process and ultimately obtain payment via that way. Ruby picked up on a point earlier that sometimes, we do get companies that fall over during that process, and if it goes insolvent, we can also support customers with exercising retention of title, or registration of debt, and monitoring the insolvency process, and waiting for dividends. So essentially, we go right from the beginning all the way through the collections process till ultimately we get payment.
I think we probably all know from speaking to friends and family, credit insurance is really niche. When you speak to your friends, they're like, oh, what's that? Is this something to do with a credit card? And you're just like, hang on. And then you've got to find some strange example to demonstrate this. Do you think credit insurance is undervalued? What are your thoughts on kind of businesses? Do they only realise they need protection maybe when it's too late and we've seen an insolvency? Or
yeah, you do get a mixed reaction. A lot of people seem to think it's like car insurance, I think that's so when you've got through explaining what it actually is, it's then that actually we're not something that you legally have to have. So then we're seen as this, additional cost, but then it does tend to be, then we do see, unfortunately, on some occasions, that it's always after the insolvency or after the big loss, that then the company sort of are like, oh, actually, this is what this is what you could have had, and you could have had this insurance. And then at that point, it's then, trying to have a look, can we get you insurance on all your risks? So there does seem to be a perception that, we are a very, expensive, product as well. But I think they're all myths that hopefully we can cure today.
What would you say mid-sized business would expect to pay for a credit insurance policy? I know obviously there are so many different factors that come into that, but what would a finger in the air amount be, Nick?
Well, that's the beauty of it, is that, we can look at every business within within their own merits. We don't say that you have a band and you will pay X, Y, and Z. We do offer bespoke solutions depending on turnovers, debtors, trade sectors. There can be, varying different prices. But I would just say that, to come to us to get a quote, and I bet you they don't think it is as expensive as they perceive it to be.
Would you say, in your experience in your portfolio, I'm putting you on the spot here, that we pay more claims to individual companies than what they actually pay us in insurance premiums?
Yes, we do have a varying loss ratio across sectors. And for me personally, with the portfolio I look after, it is varying different sectors as well. And that's the beauty of of our job, is that we're not just looking after one sector. We look after by area. So we look after a different number of customers, and we can then build up that experience across sectors and across businesses as well, that we can also help with for them, as we perceive an account manager is opening the door to opportunities and within Atradius. So if they have a query, we can more or less find out the answer from them, and go back to them. So that's the added value of the account manager.
Somebody's mentioned here that credit insurance is too expensive, but what can be done to lower the costs of credit insurance?
So I mentioned before how we always approach each business bespokely. So what we can do is we can look at different options, structures. We can look at which specific part of the ledger they want to insure. They can be risk share. They could have different structures in regards to the risk share that they want to have, or the specific type of deductible. So it's pretty much, we will come, we can have a chat with that customer and say what is important to them. What are they worried about? Some, FDs and MDs just want to say, we want to be able to sleep at night. We hear that quite a lot, and have that peace of mind. They've got everything covered. Some will just say, actually, I just want to have a look at this, this particular part of my ledger. I think we're very exposed to. So we can very much tailor it to whatever they wish, really. And we can have a look at various different structures.
Nick, would it also be fair to say then, if I jump in there, that the robustness of a customer's own credit management process, so that their own done-in process, can also heavily affect the price? Because if they have a really robust done-in process that they're able to collect on their customer base, that will give us a bit of peace of mind as well.
It does indeed, yes. We can look at, what their DSO is. We can look at their procedures, and obviously, we have an element in the policy called a discretionary credit limit, and that can fundamentally impact what their processes are, and their credit control procedures can fundamentally, influence that discretionary limit. It's also good as well to understand, for speaking to, Yvette and her colleagues, is if we can understand the customer's process, we can sometimes bespokely fit that around the collection process. So there is where we can, we cross paths daily with, various departments, and we all sort of tend to be that it is sort of the one Atradius approach, as we say. So yes, it can have a very much an impact depending on their own procedures as well.
Sorry, Nick, I'm just going to throw this one back to you. Please, can you explain for us what the difference is between a credit limit and a discretionary credit limit?
Yeah, sorry, I was trying not to go into too much detail about the specific structures. A credit limit is where Ruby and her colleagues will actually assess the buyer, and they will then give a limit to say this is what the amount that they're happy to provide. A discretionary credit limit is within the policy, and it allows the customer to have their own underwriting pen up to a certain amount, and based on certain policy terms and conditions, but it's allowing them the flexibility that they can set their own limits and also come to Atradius to have something in writing.
Just from chatting, and I mean, we live and breathe this world, but the messages that I'm getting is that we provide very robust information, but we also give customers lots of flexibility to work with us, even though kind of our processes and procedures and information that we share is very robust. So you can see how complicated credit insurance as a product can actually get. Yvette, I'm going to come over to you. Somebody is asking you, why do I need collections if I've already got insurance? It's a very valid question.
Okay, well, I mean, we hit on a good point there about the cost of credit insurance. So obviously, the more claims you make, the more expensive it's going to get. So that's why collections, that's why we're there, to help you not have to claim on your credit insurance policy, to make you more attractive for credit insurers. And another question that I get asked, which is very similar, is, well, what does collections do different to what I do? I mean, I send letters and I chase and I call. Some of it comes down to just the brand, because I mean, we make it clear to debtors, as soon as we're appointed as a collection company, we make it clear that we've been instructed by our customer, and we make it clear that we are part of the Atradius group. And of course, being known to us as an overdue debtor could very well affect the opportunity to get cover, cover from some of their suppliers. So of course, that can happen. So it's the brand. Extra resource. So, we hear from credit managers a lot at the moment that another challenge for them is resourcing and sometimes language capabilities. So if you have some additional resource, which, let's be fair, if you're an insured customer, it's also free of charge, as long as you comply with the policy conditions, it costs you nothing. So there's the brand, there's that additional resource, which has got additional language capabilities for you. So it's a no-brainer for an insured customer. It's an absolute no-brainer.
It's funny, actually, that we've had this whole conversation and we've just plugged that in at the end there. You don't have to pay for the collections activity if you've got a credit insurance policy. That's a huge selling point, really. And we've left that and tucked it in the corner at the end as we got lost in all things credit insurance. So I think I'm going to wrap it up there and thank the three of you very much for your time and taking the time to explain all things credit insurance to us today. And thank you everybody for joining, and we hope you found it useful. Take care. Thanks very much, guys.
Thanks,
Bye.
ladies.
Thanks. Bye-bye.